My name is Louis-Pierre Gignac. I'm President and CEO of GMIN Ventures. We're a aspiring intermediate gold producer. We just completed building the Tocantins mine in Brazil last year, and we're essentially looking to start development of the Oko West project in Guyana this year. So lots on the development stage to talk about.
My name is David Cataford. I'm CEO at Champion Iron. We operate out of Quebec, one of the largest high-grade iron ore mines in the world. We're the largest publicly listed pure-play high-grade iron ore producer in the world and looking to be able to develop more resources in the future.
Louis-Pierre, lovely to have you aboard. And David, good to see you again, sir. Look, this is part of the Mind Builder series, and we just thought we would ask people on the inside what they feel is important, what we as investors should be looking at and should be valuing, and maybe understanding a little bit more. So I'm going to have a romp through a bunch of different topics today, but I've got to start with people. I'm told by all the great and the good of investing that it starts with people. So Louis-Pierre, for you, the three most important critical leaders in your mind building team are who?
Oh, it's not just three, but that's a good point. I mean, the team is everything when it comes to development. So we have a common saying and that we like to say is you don't build a mine, you build a team that builds a mine. So if you don't have the right team, the result isn't going to be what you expect. So definitely it all starts with having a really solid project director who's going to oversee the whole project, whether it's cost control, schedule, execution. But really after that, when you typically see a construction project, you're typically talking about thousands of people. And so that's an important challenge in itself. And on remote projects, whether you're in the middle of the jungle or, remote locations, you need to transport people, you need to feed them, so there's a lot to manage on a project. And so you need really strong skills. But also, I mean, it's everything else. It's engineering, having really solid engineering that can support procurement, getting everything to site on time and, and in good condition is a challenge. So there's so many things that need to be considered in a proper project, and you need to have everyone that's pulling their weight in that team.
Right, and let's stick with you, Louis-Pierre. In terms of your philosophy to in-house versus outsourcing, given your heritage, how important is building a kind of culture around the way that people go about their business?
Yeah, no, that's a very good point. I mean, we consider project development to be one of our core competencies and actually one of our competitive advantages in the space compared to other gold companies out there. So we have an approach that we like to refer to as a self-perform approach. So we have that whole team internal to our organization. So we engineer stuff, we procure it, we have the people on the ground. And so essentially we direct hire everyone on the project that's going to be part of that execution team. And the concept there is we're looking to cut out the middlemen, the contractors that are there to take profit off the table. I mean, they're not doing anything for free. So we avoid having a situation where we're managing contractors as opposed to actually managing the project itself. So it's something that's unique. It's difficult to kind of replicate because you need to build up such a large team of the right people to operate with that type of model.
And what about you, David? Do you think it starts with the board, or do you think it starts with the operational management?
I think I'm a little bit with Louis-Pierre on this one. There's so many skills that are necessary to make this work that it's really tough to say it's the story of one person or two or three. And when I look at when we started Blue Lake, I mean, it's the electricians that we had at site were key, the people that were starting up the mining equipment. I mean, there's so many different elements that if you just have one good person, very difficult to start up a mining project. And I'd follow up just on the relationship with the suppliers, because we've got the same philosophy as Louis-Pierre, and we worked together when we started Blue Lake, and obviously Louis-Pierre helped us a lot to be able to get it up the ground. But when I look at what we did with our contractors and with the suppliers, we have the same mentality as Louis-Pierre, do most as we can internally, But even with our engineering firms, we had them pass psychometric tests to make sure for the individuals that we were going to work with, because I think if you can work in harmony, and harmony does not mean that you don't challenge yourself, but if there's no fights and there's no pointing fingers, if we could get everybody to work together, that's how I think we managed to hit schedules. And we're very proud of having done now 3 projects on time and on budget.
It's interesting though, Louis-Pierre, you used the phrase about, contractors like taking money off the table, right? That's their job. That's how they get paid. Nothing wrong with that. But how do you kind of strike that balance between being economic or profitable or, looking after the margins and running the company in the right way? I mean, people will always go to, safety culture and ESG and all of those sorts of things, but you got to get the balance right? I think someone once used a phrase to me and said like, oh, we've got economic geologists. And I was like, what the heck are you talking about? Do you have economic operators? I mean, how do you manage all that?
You know what? We start by putting in place an incentive program that's common to everyone on the project. So that's number one. We have everyone pushing in the right direction in terms of what our key performance metrics are. And you mentioned safety, and safety is the first one. So it's essentially safety, CapEx, and schedule. And so we develop an incentive program that's going to be common to everyone on the project, from the janitor all the way up to me as CEO. So we're all measured off the same metrics, and we're all pulling in the same direction. So that's number one. So there's a common incentive across the company. When you have contractors, I mean, it's hard to pull them under that same tent in terms of incentive structure. So that's kind of the first thing, and this is something that we've applied on project after project, and it's a formula that we don't want to deviate from.
I think what's important is that everybody that works needs to make money. And I really liked what Louis-Pierre said initially, saying that we want to cut the middleman. So I hate wasting money. So if there's things that we could do ourselves, I want to do it. But I don't want to be in a situation where we've got these fixed price contracts. And then, because when you do that, either somebody is assuming a lot of risk and you're paying for that risk portion. And if you put less and you manage to squeeze him and you're successful, when he starts running out of money, he's going to be less productive and he's going to be less incentivized to make it work. So we've got our internal incentives a little bit like Louis-Pierre, but we make sure that we create long-term partnerships with suppliers and contractors that, one, I don't want to get screwed. So I want to make sure that the time that they're putting it on the most efficient way, but I want their A team. So I don't want to try to squeeze them to try to get the best price. I want at the end that we fit within our budget and that we fit within our schedule. And to me, that's much more important. So we find the right people and make sure that they're incentivized properly, even if it's in a different way when it's with a contractor than with internal people.
And how do you feel about, because I had a great conversation with another mountain builder recently, and, one of the things that struck me, he said, there's such a thing as too much control. You've got to empower people to do what they need to do, and they know how to do. And in fact, if anything, it makes the CEO's job a lot easier. So, Louis-Pierre, you've got a lot of systems and processes in place, but again, how do you strike that balance?
That's a really good point. I mean, one thing, before you start a project, you need those systems in place. So you need that, your SAP, your procurement systems, your logistics systems, document control, all those things need to be in place before you even start a project, and otherwise it goes off the rails right from the beginning. But it's funny how you say that, because I mean, we usually generate a monthly report where we detail out everything that's going on in the project. We have our costs, we update schedule, and typically what we do is on a quarterly basis, we re-estimate a forecast to complete the project. So if things are on track, I mean, nothing changes. But then there's always variances, and it's how you manage those variances over the course of a project that makes sure you get to the right number. So there's pluses and minuses all the time. So that's what you need to be managing throughout that project. And one thing that we found is, we don't try and overdo it in terms of reporting and fancy things. And we've been criticized actually from saying, oh, well, this is very simplistic. It seems like, this report should be a lot thicker. And so often my first question is, well, what is it you're missing that you would like to see? And they can never give me an answer. But I've seen the opposite true, being very detailed reports from, EPCM firms that generate this thing, and then it's going off the rails. No one knows, but they have the very, really thick report to look at, but no one knows it's going off the rails until the very end. So, it's all about, sometimes you see people describe progress on a project. They show pictures and then they say, oh, engineering is complete, and that's such a big chunk of the project. And you look at the pictures and going, no, they haven't even started pouring concrete, or there's no structure going up. So there's no way this is as advanced as they think. So there's all sorts of ways where in a spreadsheet you can make things look good, but it's having the right people that know in reality, how a project is performing. So
you're arguing that if you've got good people, they feel empowered because you trust them
yeah.
to make the right call, right? Okay, but the data gathering is important. So how does that affect their ability to say, put their hand up and say, hey, Louis-Pierre, I think we can do better. We can optimize this better when things started? Because sometimes when the trains left the station, people are reticent to say, so we need to stop, or we need to change. So again, do you allow that?
Yeah. Oh, 100%. If you're not doing that, you're going to fail. So for example, we had steel structure being supplied on our project. The vendor was not delivering on time. So we said, look, we're cutting your contract short because you're not going to deliver what we need on the schedule we want. So we went to a second vendor. So if you're not allowing for those variances to take place, you're not allowing yourself to adapt and improve on the schedule. So there's examples like that. You need to be able to say, okay, well, we have resources that we can, and that's what's nice about the self-perform approach is we have the team. If we can accelerate a certain scope of our project because we have the resources, let's do it. Let's gain that. Let's get that head start. And that's always the challenge on a project, is to ramp up as fast as you can without overspending. And then you're running at a peak rate. And then at some point, you need to get people off this project. You know what I mean? Like, they need to finish their scope and they need to go. And some people will drag things out, and the contractor will try and, or employees as well, but they'll try and drag out their stay on the project, and that leads to increased costs and whatnot. So it's this curve that you're needing to manage, of ramping up and building that momentum, and then actually closing the project at the end. That's a challenge as well.
So what about you, David? How do you feel about the culture that you've got? Does it allow for that agility, that decision making?
I think one of the most important things when we're doing a project is to make sure that you don't operate it in a silo, because often what you'll see, if you do that silo approach, you have people that are trying to protect their own small budget. But if you look at it on the macro, well, maybe it's okay to overspend a little bit on this one to get it quicker, but the other one will save because we'll be able to get that one quicker. So when you look at the way that we manage the teams, we need to make sure that everybody understands the mission and the vision of the project, and that nobody's scared of raising a flag and saying, I screwed this up. This is what it's going to impact. And they say it as soon as it happens, because sometimes you can get creative people together, find a solution, and you move forward. The worst thing that can happen is people trying to cover up their trails, which we often unfortunately see in projects, and then it leads to a much bigger problem. So yes, we need to empower our people, but we need to make sure that we've got the right way to get that info up and make sure that we can take the right decision. Because, systems are important, but we delivered a $300 million project when we started up Bloom Lake with Excel, and I signed checks by hand. So, we couldn't be more or less archaic in terms of systems, but we have the right people. And even if maybe I didn't express myself properly, the systems were good, but maybe the technology part was not there. But we have the right way to be able to approach the different steps. So I think sometimes people, they fall too much into the tool and not enough in the actual real system, and don't necessarily empower the people properly to get the projects up and running.
That's kind of a funny point you raised there, David. Like for Marion, the Newmont project we delivered in Suriname under GMS had. The accounting system we had, our project, it was QuickBooks. The thing you buy off the shelf. That's what we used for project control accounting. It works. You don't need the SAP of the world, but obviously now we're using SAP. But to your point, it's all about, doing the right things, not necessarily the software you're using.
The question I was going to ask was around, because I'm kind of liking this bit of it, because it's just the psychology of large corporations with lots of people. It becomes very hierarchical. It can do. How do you ensure the kind of transparency without? Because if you start using words like, "Oh, you've got to be accountable," it sounds like it's a punishment, versus a kind of transparent environment where people say, "Well, actually, yeah," you said, "David, yeah, I'll put my hand up. I think I spotted something here. I got that wrong, but I've got a solution for this." Is that some unspoken thing, or is it very deliberate part of the weekly meetings and go, right, let's talk?
I think it starts with how you set up the project. If you have $1 billion project and at the top you slash 400 million and you say it's a $600 million project, you've set up to fail. So you can have all the accountability talks that you want. The end goal is not achievable, and then you're going to blow up your budget and it's going to be difficult. So I think first you need to set up the real target and what it's actually going to cost to be able to deliver the project. Then you have the buy-in of the people to be able to be accountable. And I think people see the way that you manage the different steps and they follow in the way that you do it. So when I go to the board, if there was a blowout on a certain portion of the budget, well, I'm not going to hide it. I'm going to be upfront. I'll be able to say what I think are the solutions to be able to mitigate the risk, but I'll be upfront with it. And when that trickles down, well, you can go down to all the different levels up to the mechanic that's actually doing the work. And then that flag is going to be risen much quicker.
It's a difficult thing to do in a kind of public market environment where, those sorts of mistakes can be company killers. Companies get punished real hard.
If I was to invest in a company, I would want to make sure that management has skin in the game. I mean, when I started Bloom Lake, I sold everything I had and put all my money in Champion, and it wasn't that much, but it's everything I had. So I needed to make this project work. It's not just a question of, do I want to make it work? So I'm not managing other people's money. Obviously, a large portion was other people's money, but I'm managing my own as well. So when you talk about being concerned about, I'm not concerned of losing my job. I'm not concerned of, I want to make this project work because I've had everything invested in it. And by hiring the right team, well, I also have all of these people that are now working on the project that I want to make sure are successful. So you create that sort of aura that people want to make it work. And even if it's a bit more challenging, I think you can get the same with the right contractors and the right suppliers that you work with. You get them involved in the success and you give them the credit that is required when they actually deliver different things instead of taking all the credit on your own. So you bring everybody on that journey of that successful project.
So Louis-Pierre, you're an engineer by background. Is this, when you start something up like this, is it all about the engineering? Are you building to spec? Are you building to budget? Or have you got to sell something a little bit more ethereal to the team that you're bringing on? Is it just all about the money?
No, it's about, building something out of nothing. So a lot of the people that are, I like to say, project junkies, is they like that thrill of they're starting from nothing, and 2 years later, look at everything that's happened. And I've done a few, and I've been on the ground for a few as well, and it's amazing. I mean, you're there for a month doing your rotation, you go back, take your break, you come back, and you're like, can't recognize this place. I mean, it's changed so fast. So there's that thrill to the fact that you're building something. But yeah, the money is good. I mean, we try and pay our people well. We want they're growing and well compensated for the skills and the competencies they're bringing to the table. But to David's point, I think having the right estimate to start off with sets you up for success. So when we put our estimates together, a lot of the engineers that are and estimators that are part of that, call it engineering team, actually move on to be part of the execution team. So there's not this handover of, okay, someone thought this cost something, and then someone else has to try and deliver it to that cost. We try and eliminate that. It's the same people. So there's not this, oh, well, I wasn't part of putting the estimate together. So that's, you kind of eliminate that step. But yeah, I think that's a key part. And it's also putting the right number in place, not just to look good. So there's a lot of junior companies that they prefer having this really low capex to generate this exceptional return on paper. But when it comes to execute, it's unfeasible to do that. And I think, compounding the situation for development stage projects is a lot of times engineering is done. You go through a permitting process that in some cases can take forever. And so by the time the project done gets its permits and you assume you have the financing right behind and it's time to go, well, you need to refresh and have, fresh numbers to work with as opposed to a stale estimate that's 3 years old. So, there's that point going back to having the right estimate. And let's have a proper control budget that everyone can be successful delivering against. So,
and what's funny is that I think Louis-Pierre is a similar beast as I am, but we're very detail oriented at the right time. And I find in estimates sometimes people don't put in the time that is required. I remember being in a almost a fight with the engineering firm that I was working with. It wasn't Louis-Pierre's, it was another engineering firm, and that I won't name, but getting in a fight because I wanted to add the coffee estimates at site for in our OPEX. And they're like, oh, that's too detailed. I said, well, we know it's 50 grand a year. Why don't we just add it? I mean, what is the downside of going down? I'm not saying everybody needs to go down to that level of detail, but we had a unique situation when we restarted Bloom that we had previous budgets. So if there's elements that we know, why don't we bulk it up to the most detail that we can, and then we're able to take a view on it. But to do those things, it takes time. And I find that not everybody puts in the hours that is required to bring a project like that on time and on budget.
Well, let's talk about sort of technical design and trade-offs, because it always interests me. I think, the good projects are able to find the money to do what they want to do, and, to in an optimal way. Projects which perhaps the assets, certainly at this moment in time, whether it be at PFS or even DFS stage, perhaps don't quite have what it takes. There's a kind of engine, whether because there's an engineering complexity, or you got to make flow sheet decisions, or capex versus opex, etc. You need to make trade-offs. So, for you, Louis-Pierre, what was sort of the more difficult technical trade-offs made during your kind of feasibility study or DFS stage?
Yeah, no, there's so many, but you're always doing that trade-off of how big do I make this project, like the right sizing of the project itself. And you see so many times now, but a lot of projects, they try to phase it, so to kind of limit the upfront capex. But then, as the project goes along, you see a lot of people say, oh, well, we're rescoping it to build in phase 2 right away. Yeah, no shit, because, a gyratory crusher, you're not going to put 2 of them in. You know what I mean? Like, you have a primary crusher, and you can have 2, but that's inefficient. So there's certain scale decisions you need to be making up front that change the dynamics of what you're doing. And one of them for us was like contract mining versus owner mining. Do we want to be investing in our own fleet and self-performing the the mining activities, or do we want to contract out? And there again, we did the trade-offs, and we felt it was best to invest in that additional fleet and be doing it ourselves. And it's a total cost type of exercise, right? So those are the type of things that we often do during the feasibility studies. But then there's also just philosophies of how you want to operate. But like, for example, on OCO, we did trade-offs in terms of power solutions. We knew we had to be self-sufficient in terms of power. So we looked at different types of power generation solutions, whether HFO, diesel, in one location with a transmission line, all sorts of things like that we traded off. The big one I find is tailings management nowadays. There's the different approaches to tailings management, but then there's the different locations of where you put it on a project. So you're dealing with topography, you're dealing with distances from your plant and project. So those are key ones that when you look at the grand scheme of a project and Like most people think, oh well, the plant is the biggest piece of the capex. It's not. It's maybe 30%. You know, there's everything else around the infrastructure required to support the operation. Indirects are 30%. Someone tells you it's less than that, they're probably wrong to start with. So that's the point. And when you're trying to right size a project, there's a lot of indirects and stuff that they're going to be there regardless of the size.
Such as what's in that
Well, just
line
like
item?
owner's costs. You're going to have a truck shop and admin building, this and that, kind of regardless of the size. Yeah, the truck shop will be a bit bigger. You add a bay or two, or but there's a lot of support infrastructure that you need. The access road to get in there. If it's a transmission line, then it doesn't really matter that much how much power you're moving on the transmission line. It's per kilometer cost. So there's things like that.
I had one guy he operates a small mine in South America, and he said 30% of his costs were tires, which made me smile. It's not a line item I'd ever thought of before.
Well, in terms of scale, like G&A is on an operation. So G&A costs, when you look at the OPEX of an operation, are basically, I mean, most of it's labor, and you're going to have a GM, you're going to have an HR manager, you're going to have all these various positions, right? So if your plant is 20 million ton per annum or 10, all those people are there. Obviously, there's going to be some movement around call it this fixed cost if you wish, but a lot of it's essentially a fixed cost.
David, what about you? I mean, in terms of this kind of constant trade-off and re-evaluating where you are. I mean, did you have to kind of give up something that you didn't want to give up, or was that a factor of, well, can we access the capital now in the market to do this the way I want to do it?
I mean, the biggest thing for us is we decided that we wanted to be a mine operator, and that we wanted to build a long-term sustainable company that is going to grow through time. So when we build something, we're actually going to operate it, and we're going to operate it for more than a year. So when we do the designs and we do the trade-off studies, what we want to make sure is that we're going to be able to deal with whatever decisions that we take. And often what is important for us is to really understand what is the real CapEx number to be able to get that done. Because sometimes I find trade-offs are made in a way that you're building something that's less efficient. Is that really the good way to do it? I think the good trade-offs are when you find a creative way to do something differently that will actually allow you to operate properly but save money. Those I'm all for. The trade-offs, sometimes people waste a lot of money. Do I want this supplier or that supplier, and I'm going to save $500,000 on, well, it depends on the scale of your project, but $500,000 on, let's say, the whole mining fleet, versus how easy is it to get the service to be able to maintain that equipment in that region. I mean, when you look at trade-offs, it's not always just the economic dollars, but it's really the whole scale of the project. And I think the easiest thing that, or something that I see that people lose sight is, one, yes, I put all my money in this, but I also have 14,000 shareholders that expect that I'm going to use their dollars efficiently. So when I come out with a study, I want to make sure that I can actually achieve it. And I find when you look at a feasibility study and you're doing trade-offs, I can determine the engineering portion and what it costs to build. I can't really control the market where the price is going to be. So put the market price aside and really understand what's the real cost to bring this on. And then once that is done, there's no ego. There's no, is it a right business decision to bring this online with the economic situation, yes or no? I find often I've seen trade-offs where people look at, this is how much it can generate. Let's try to fit a CapEx that works within that number. And then you get in a situation where you're not doing the right trade-offs, I find. I prefer the trade-offs that make sure that we'll have an efficient project at the end of the build.
My wife has this fantastic phrase she uses me. She says, buy cheap, buy twice. It usually means I come back and I've found this amazing deal on this item that we absolutely must have, and then it breaks 2 months later. She said, I told you, you should have gone for quality. So when you're looking at the kind of various design elements as part of the build, do you design in reliability, like resilience in certain parts of the design? Because if that thing broke down further down the line, you'd be in a whole world of hurt and pain. I mean, what do you
100%.
do? Yeah.
Oh, 100%. So, I mean, David was kind of mentioning in terms of the price of something and vendors. I mean, when it comes to processing equipment, I mean, we go with the reputable top shelf vendors that can provide the support after that you want. So the Mezzo Rutex of the world, the FL Schmidt, just solid vendors, as opposed to, well, I'm going to buy this Chinese replicate of a crusher or this or that, where who knows what kind of support I'm going to have after, and accessibility to parts and whatnot. So that's just our experience. I mean, maybe some people have had great experience with Chinese products. I mean, I'm just talking about, we looked at the price of something, but it's how you maintain it and operate it to the efficiency levels that you expect down the road. And that's more key than anything else. But, I think the other thing is, I think there's technology and investing upfront in technology to be as efficient as possible. So, I mean, in today's world, having a mine dispatch system it's almost a standard thing, but why wait 2 years down the road? I'm going to put it up front. I'm going to invest right away in that. I want the benefits of that right now. So those are kind of simple decisions. We did similarly in the process plant. I mean, we put expert control systems in place to help operate our SAG mill, operate our flotation circuit. We've seen tremendous benefits from putting in these systems right from the start. So those are the type yes, that's CapEx and it's a little more spend up front, but it goes down to NPV. I'm going to save so much in OPEX, and this is just a great investment.
So money well spent. Money well spent, as far as you're concerned, in terms of ensuring future sustainability and sustained production. Okay. And so your thoughts on that?
Well, I think one of the key parts is, how do you build your design team? Because when you're thinking about the project, if you get too creative people, then you'll get a project you'll never get off the ground. If you get too many operators, you'll get a project that's so expensive you'll never get it built. You need the right ratio of operators to really make sure that you don't take decisions that someone won't be able to operate. You need a few maintenance people to make sure that whatever you're building, you'll be able to maintain it after, and you have access to all the different parts. You need people that are cost rigorous and make sure that they're looking at all the different alternatives. And you need a bit of that creative portion to make sure that you're thinking a bit outside the box and you can find those right trade-offs. But building that sort of team is very key. And what has been very good for us is that we have not relied on a single engineering firm. Because when you think of all those different skill sets, very difficult to imagine one firm that you'd be able to have all of that within one umbrella for the plant, for the tailings, for the mining, for all of the logistics part. So what we've tended to do is try to find what teams within engineering firms that we want to work with, make sure that we pay the right price for the engineering so we have access to the A team, and then bundle that up with our owner's team to make sure that we've got the right sort of design. And then going from there, I think it gives us that edge to make sure that we've got the right sort of plan to start, and then everything sort of falls into place if we execute it properly.
I think that's a really good point, and something that people kind of skimp over or don't appreciate enough. Investors, I'm talking about, don't appreciate enough. It's the quality of the people that you are, the consultants that you're using. Is really, really important. And there's another thing which we used to, when people were coming asking us for money, was say, we've got a new technology. It's going to revolutionize everything in mining. It's very, very innovative. Give me some money. And we were like, no, we didn't like innovation, because we'd say, we'll come back when you know it works, or we'll come back in a couple of years' time when other people are also doing it. How do you feel about incorporating innovation into your designs, your systems, your flow sheets? Louis-Pierre?
Yeah, it has to be proven somewhere else. I'm not going to be the guinea pig of anything. That's for sure. So I mean, I don't want to bash other projects, but if it's show me the catalog and we're picking stuff off the catalog and it's supposedly great, but no one uses this, you're doomed for failure. So I mean, TMAC is kind of a classic example of trying to cheap out on the process plant with various pieces of equipment and technology that really weren't proven, and it failed. So versus the classic processing equipment that everyone knows works was put aside on that one. So there you go. I mean, that's kind of an example. But yeah, on the mining front, I mean, you hear people talk about, oh, we're going to use road headers. We're going to do these different things underground. I'm like, oh, okay. Are we sure about that? So continuous miners and, jumbo drill blast, it works good. So, I mean, you can be fancy at some point, but it comes with additional risks, and that's where investors should be concerned.
Yeah, let's factor it into the thinking. I mean, have you seen examples, David, out there where you just sort of wince when someone talks about innovation?
I mean, it's you need to be very big to be able to risk innovation. And when we look at the way that we build our mine and looking to build our next mines, there's so many people doing great things around the world. And the good thing about the mining community is that you can get on a plane and go visit pretty much any mine in the world and chat with the operations people on this equipment. How did it work? How did it not work? So you've got all that knowledge base. Why would you try to do something new when you're starting to build something? I mean, for us, I'm a bit, not a bit, I'm 100% with Louis-Pierre. If it's not off the shelf or I can't necessarily prove that it's been done somewhere, it's not going to be incorporated in our initial design for sure. And even recently, just an example, we're building this new flotation plant to make one of the purest iron ores in the world to be able to benefit from the green steel transition. So we're building this right now, but when we were doing the feasibility study for this, we're in the final meeting to approve the feasibility study, and my team brings up equipment, and originally we're supposed to have a ball mill, but then it got switched to vertimills. And I've never worked with vertimills. I had heard rumors, so they'll probably tell the story differently. I'll say I calmly told them to get on a plane and go visit at least 6 other sites that have vertimills and come back with a report on how does it work, what were the issues, and they did that. 2 weeks later, they came back and they got a list of things to modify on our design to make sure that we incorporate that equipment properly. So, I mean, we're far from innovation. Now we're talking about something that already exists that the vendor proposed to us, the engineering firm had designed, but we went out to other operations to make sure that we've got the right way to incorporate it within our...
Yeah, another one that's for me is always, if you need an ore sorter for your project to work, to me, it sounds like a nice optimization opportunity where you move the margin or some incremental improvements to a project. But when that's like, we're going with the full ore sorting technology right from, that's such a key component to our project. There you go. I mean, the risk level goes up in my view. So it just needs to be properly studied. I'm not saying it doesn't work. It does work in many places, but it's just added complexity and risk.
Yeah, I mean, I guess you guys are putting out small fires every day in terms of risk management and heading off some of the problems at the pass, so to speak. But what are for you, when you go and speak to your institutional investors, are there any kind of misconceptions that they have about mine builders and perhaps how they should run their business? Do you sometimes get these questions? You go, well, why would you ask that?
No, well, I think the investment community, with all the blowouts that have occurred, I mean, there's been many. There's always this skepticism to say, well, let me watch you get on with your project, and I'll find the right opportunity or the right timing to invest. And that's kind of just a risk mitigation in terms of the timing of when to be part of a story. And that's the reason as well that if you look at development stage projects, they'll trade at a P/NAV multiple that's a fraction of where it should be eventually when it's built. So again, just a recognition of the risk inherent in that phase of a project. But again, that's where I see the great opportunity. That's where you can create a lot of value, is is by properly executing on a project, and especially when you're acquiring something that's reasonably priced and factoring all the capex required, you generate a great return at that point. So.
But is it slightly frustrating for either of you during that kind of build phase where, you know, the Lassonde curve, Valley of Death, and all of that, where people are looking for you to kind of execute on the build and then come with you on the ride once you're, you know, throwing off cash, or feel that you're close to throwing off cash, because you've then got to get that balancing act of, you know, can you access the money? What's the cost of that capital? You know, why isn't my share price moving? All of those things that you do when you're a little bit smaller in size. I mean, again, how and you guys are doing that development phase at a point in the market where we had COVID, supply chain issues, inflation through the roof. You know, getting stuff in Brazil was you know quite the challenge, I think, for most. You know, and David, likewise for you. So, I mean, how did you feel during that period, and what were the things that you said to the team? Look, we just got to get focused on these few points, and it's going to be okay. I mean, David, I'll go to you first.
Yeah, if I just go back on the investor part and the
Yes,
institutions,
sorry.
the one element that I find a little bit challenging in our work is when you put out real estimates, because the credibility of the mining industry is not necessarily at its top. People often assume you're going to have a blowout, so they're going to have their own internal discounting factor on your project, which is a bit annoying when you come out with the real number that it's going to cost to build, because then they're adding that protective contingency, if you want to say, that I don't think should be on a project from a company that delivers on time and on budget. So I'd say that's one of the elements that's a bit complicated. And tying up to your next question, when you look at COVID, when we came out with our feasibility study to double our production, to add 7.5 million tons of high-grade iron ore on the market, well, that project, we came out with a price tag of about $700 million to develop the project. And there was a lot of skepticism in us being able to achieve the project. But you talked a lot about trade-offs. I mean, early on in COVID, we realized that if we want to get this project up and running, we need to be creative. And we talked a little bit about innovation, and I don't really see it within the equipment that we build, but we were very innovative in the sense that we're one of the only companies that built its own COVID testing facility directly at site. And that really mitigated a whole lot of risks, because we were granted permission by the governments to build throughout the whole COVID. So never were we stopped by any lockdown, because we had our own COVID testing facility. So that's the kind of element that when you get everybody on board on your team with a mission to deliver the project on that date at that price, well, people come out with ideas. And it just happened that we had hired a guy that was doing a doctorate in biophysics, which we didn't know. And then he's the one who came out with the idea, hey, why don't we have our own COVID testing facilities? We can do that. So then we started working on it. It cost $2 million, but it allowed us to build the project during COVID, $700 million on time, on budget. So I'd say getting everybody on the same, with the same goal, having everybody understand that they can raise up elements and bring internal small innovation, if I can call it, and then being able to pick those up and deliver on them is really what I think set us apart to be able to deliver that during that period.
Louis-Pierre, I mean, I reference Brazil. Yeah.
Yeah, it's a challenge when you're trying to fund a project, especially when you're a development stage company without a balance sheet. The equity is always the most difficult part to pull in. And so the minute you don't need the equity, then everyone's throwing term sheets at you. So that's the way the market works. So you gotta, obviously our financing had to be fit for purpose. So, I mean, the streamers were quite instrumental with Franco-Nevada and our funding of our project. And so we, that's been the key, was getting it off the ground and getting it financed at a low cost of capital at the time we did it. But also not, it's a funding that was set for TZ, and knowing that this would be one asset in a multi-asset company as well. So, but we did have key shareholders. I mean, we do have to this day, La Mancha being a very supportive long-term shareholder. So it is key to have those good, strong backers that want to support a growth-oriented company.
Has there ever been a moment, and I see this a lot with family offices that come into projects, where they come and tell you how to run your company? Have you ever had a moment where institutional or family offices have influenced your strategy?
Well, obviously, I mean, we have two board members from La Mancha. I mean, it's a collaborative type of relationship. But yeah, they've had experiences elsewhere with other companies. So they bring that to the table in terms of sharing what's worked elsewhere. So I see it as being constructive. But yeah, I think they recognize that we have unique skill sets. They're not going to come and tell me how to build a mine. But yeah, they're going to give me opinions on other things that they've seen that have worked. But and that's well appreciated.
Yeah, I think when you look at a certain portion of investors, I know that at the beginning we had a lot of people telling us, it doesn't make sense. You need to sign off takes right away. You need to do this. You need to do that. And we pushed back. Obviously, I think the big advantage is if you look at our company, around 45% of the shares are held by a few individuals or the government of Quebec. So we had a pretty decent backing with our strategy, but very happy we didn't listen to those kind suggestions, because if we would have signed off takes at the beginning, we wouldn't have benefited from the dam burst in Brazil that shifted iron ore price to $200 and allowed us to generate almost $1 billion of EBITDA in the first years of production. So, I mean, when you get comments like that, there's certain that we've heard over the years that have been very instructive, and that we've got investors that are very sophisticated and that know the business, and always fun to be able to chat on strategy. But sometimes you have more high level, typical ways of doing things that you need to hedge, you need to do this, you need to do that. But those are the ones that we push back, and we keep our strategy to make sure that that we generate as much revenue for our shareholders as possible.
Gentlemen, I think we could talk ad nauseum about lots of other aspects of mine building, but I think it's nice to see two companies getting it right, because I think you referenced Louis-Pierre, there's a lot that's gone wrong in the last couple of years or so, which it damages the industry as a whole. It kind of takes investors out of the space when they see these kind of big failures. So we need more companies like you guys doing what you're doing and moving these projects forward. So, gentlemen, I appreciate your time today. Thank you very much.
Thank you, Matt.
Thanks for having us.